So with all these potential catalysts looming over the market, we wondered what our traders think is the most important chart right now. A lot of pressure here. Guy, why don't you kick it off?
It's always pressure on this show, Melissa Lee. I think it's a bank. So if you go into the premise that our economy is driven by people buying things, right? People having jobs, people buying things. People buy things on credit. Well, bank credit has been contracting now for the last couple of years, and it's starting to move in a pretty noticeable way. So I think that's concerning, especially when you couple that with the fact, and we're going to know about this within a few hours, this unemployment rate that I think is going to start ticking higher in a meaningful way, in a stair-step way higher, which, by the way, the Federal Reserve wants. So if bank credit is contracting, if people are starting to lose their jobs, in my opinion, it can't augur particularly well for the economy and then subsequently the stock market. Now, you will say correctly that you've had these concerns for a while. You're 100% right, Melissa, and it hasn't manifested itself.
What game are we playing now?
No. There's no reason to leave. We're 2 minutes into the show. However, I just think it's, again, I use the word inevitable. I think there's an inevitability here.
I have a question about this statement.
Please.
Does it include mortgage debt?
I believe, well, it's interesting you say that.
Because I would think that there would be a drop-off because people are taking out less mortgages.
Without question. But I also think it's interesting. You know, the banks were on Capitol Hill, regulation coming, more stringent requirements in terms of, that's all fine and may happen. Private equity will fill, or private credit will fill that void. Problem with that is private credit will fill that void at probably 2x where banks lend money. So I think it's somewhat problematic.
Is this problematic in your view, or is this the consumer becoming a little bit more careful? Maybe we want the consumer to be more careful.
What consumer? The American consumer?
Yes, the American consumer.
More careful? I don't know, Dan. What do you?
No. I mean, listen. You know, I think as you pointed out, she would be right to point out that you've had this concern for a while, and we have. But like that's kind of the point in a way. You know, like the way kind of economy and the mechanism how it works into the markets or whatever. So to me, it's all going to happen at once, and that's the kind of the history of the last 25 years. The consumer goes until they can't anymore, and there's some sort of other event that causes some sort of dislocation, and then it's reflected in risk assets, in my opinion.
Tim, what is your chart?
My chart is the NASDAQ 100, and it's the NASDAQ 100, though, relative to the S&P. And I just get back to the double-edged sword that is the leadership that has been the story of the market for the last 2.5 years, maybe 3 years, maybe even 5 years. And this chart, by the way, again, it's a relative value chart. At home, you can do this if you want to basically do QQQ divided by SPY, and you get a ratio. And you can see that we're about to set either fresh new relative highs to the S&P, which means the biggest stocks in the world are leading, or we're at the old triple top, and we're at a place where, frankly, we talk about this all the time. It's also very equally scary that the concentration of longs in these names, whether it's passive investing, whether it's hedge fund crowding, a day like today, when you have the kind of moves in Google and Apple. I mean, Apple is right back to near those all-time highs. Amazon, to me, of all of those stocks, is breaking out and has the best chart. But again, this is the story. To oversimplify it, sure, we are. We keep talking about wanting the market to broaden, but it's not. There's a lot of crowding, and that's a big risk for this market. And it's a big risk that at some point these things run out of gas.
So, Mike, in your view, when you take a look at that chart, is a glass half full or glass half empty? Because you could read it either way.
Well, certainly for the people who are buying these things, it's half full and it's still filling up. But personally, I think a lot of these names are getting pretty stretched here. I would be inclined to fade. I think all of the enthusiasm that we've seen. I mean, really, what is the enthusiasm propelling the NASDAQ more than anything else? It's really this AI story, I think, picking up these biggest mega cap stocks. And, you know, I think if you've been lucky enough to ride this train, boy, I think it's probably time to get off.